All right, it's talk time now. Despite several efforts by the Central Bank of Nigeria to stabilize the Naira, the currency continues to struggle on the parallel market, trading at almost 500 Naira to a dollar, while the pound sterling and the euro is already trading at almost 600 Naira.
Okay, so let's look at how the Naira has been faring and the economy at large.
Inflationary trend informed its decision to push up the monetary policy rate. It says it was done between focusing on price stability or growth. It opted for the former because it has the tendency to impact growth and stabilize the Naira.
We felt that there was a need, in line with central bank's core mandate, to look at price stability at the time. That if we favor price stability at this time, in which case signal an interest rate movement that will curtail inflation, that when we curtail inflation, a lot more stakeholders' interests would have been sort of met.
The Apex Bank governor says the new foreign exchange policy regime is gradually yielding positive results. He describes the recent decision to sell foreign exchange to Bureau de Change operators as one that will bridge the supply gap in the foreign exchange market. Emefiele assures BDC operators that banks will soon start selling foreign exchange to them.
We all know the size of diaspora funds that flow into this country. And we thought that what we should do is that foreign currency that flows into the country through the likes of international money transfer organizations, Western Union, MoneyGram, Riyadh, and the rest of them, that those foreign currency should flow through into the Bureau de Change market so as to help to moderate and dampen the effects of price.
The CBN governor allays fears of the banking sector being in distress. He assures depositors of Sky Bank that their monies are safe. Emefiele insists that the Apex Bank will not hesitate to change the management of any financial institution engaged in infractions. The committee advised the authorities to step up efforts at budget implementation to stimulate economic activities.
All right, you're welcome back. Looking at the struggles of the Naira in 2016, hopefully it will be a lot easier on the Naira in 2017, but experts are already saying it's still going to get worse before it gets better.
But the point there is the word of, we just spoke with Professor Akintere now, who said that all the statements are just statements.
The idea.
Hope, wish, and all of that. What are the strategies? I am doing this so this can work, because, you know, in the year 2016, a lot of policies were tossed up and down by the central bank governor, monetary policies and all of that, and they didn't really work. They didn't help the Naira.
Well, according to Emefiele there, he says the new forex regime is beginning to yield fruit.
Well, you and I know that right now the Naira goes for about almost 500 Naira. That's worse than it was in the first half of 2016.
According to Bloomberg, the Naira was among the 4 worst performing currencies in the world in 2016.
See?
And you had Zambia and South Africa among the first 10. It's amazing. And I'm just wondering, what did those countries do right? What's going well for them? What are they having going for them? You know, take South Africa, for example. They had issues.
The rand had stabilized for a long period of time.
But they still had economic issues.
Yeah, they
How
had
come within all of that, the rand was still stable?
These are some of the things we'll be talking about right now. Joining us from our Abuja studio is financial analyst Uche Uwaleke. Uche, good morning and Happy New Year.
Yeah, Happy New Year to you, Mike. And
all right. Okay, let's start it this way. We've just been bantering in the studio before we introduced you now. 2016 has been, let me say, the worst year on record for the value of the Naira. The Central Bank of Nigeria, Minister of Finance, they've done so many things to revive and stabilize the Naira, but it didn't really seem to work. What were the factors that fought against the stability of the Naira?
Thank you very much, Mike. Of course, just as Ngozi also rightly said, the Naira was rated among the worst performing currencies in the world in 2016. alongside the Venezuela bolivar and Egyptian pound. Of course, you know the value of the Naira in terms of the US dollar, what we call the exchange rate, is a function of, largely a function of demand and supply. In a country where you have everything imported, a country that is import dependent, that exports very little, you are likely to find this disequilibrium, this mismatch in favor of demand. Of course, you know again that the country is relies for over 90% of its forex on a single commodity. So that in itself is a problem. We don't have multiple streams of income. In this economy, we earn as much as on a monthly basis, maybe $1 billion, we are told, and then the demand is about $4 billion. So in that kind of situation, of course, you find that the exchange rate, will be high. Now, over time, the CBN, as you rightly pointed out, has been struggling to maintain stability in the exchange rate, of course, as one of its pivotal functions, as required by the CBN Act of 2007 to maintain exchange rate stability. In November 2014, if you recall, the CBN had no choice. Again, following the dwindling shortfall in foreign reserves, had no choice but to devalue the Naira from 155 Naira to the dollar to 169 Naira to the dollar. Now, that didn't solve the problem. In February of 2015, the CBN also was constrained to devalue the Naira a second time, just within a 3-month period, when it shut down the retail Dutch auction window and decided to play at the interbank market at 197 Naira to the dollar. Okay, so the Naira was pegged at 197 Naira to the dollar, since February 2015. The pressure continued. Now, on the demand side, what did the CBN do? The CBN tried to introduce capital controls, and the prominent among them was the introduction in June of 2015 of restrictions with respect to 41 items that were, regarded as not valid for forex. Where you have items like rice, cement, furniture, margarine, sardine, even toothpick, and the rest of them. Okay. Then we also continued. Of course, we also had issues about restrictions on operations of domiciliary accounts. All these were meant to manage the demand side of the dollar, and to that extent, I would say the CBN was constrained to do the things that it did. So I do not support the idea of completely leaving the value of the Naira at the mercy of market forces, and I've told you why. Because of this disequilibrium. Even the IMF has been pushing for increased reforms, what they call increased reforms in quotes, in the forex markets, which to me is euphemism for further loosening up. The CBN has a responsibility to defend the Naira.
Uche Waleke, let me come in here. Let me come in here and bring in our guest in the studio, Ayo Teriba, who's an economist. So good to have you on the first edition of TVC Breakfast this year, 2017. Happy New Year to you. So, Uche Waleke there in Abuja has, kind of given us an idea. Okay, I think we really should take that break.
Let's take a break.
Let's take that quick break. It's 8:12 on the dot. And when we come back, of course, we'll have our guest weigh in on this. Stay with us. All right, you're welcome back. We're looking at the Naira, its struggles in 2016. We have Uche Waleke here, there in Abuja, as a financial analyst, and Ayo Tariba is with us right here in the studio. He's an economist. In response to Mike's question as to what happened to the Naira, the factors that led to the really weak Naira, I mean, the worst in 20 years. Now, some of the moves that the CBN has made, exclusion of items from importation list and all of those, floating of the Naira, pegging of the rate and all of that. And then you had the MPC during the last quarter of the year and not changing any of the price mechanisms or monetary mechanisms and all of that. How have this played out?
Right. 2016 was a challenging year for Nigeria in terms of both the price of oil and the quantity of oil produced. We had a situation in which both fell compared to 2015 because of the attacks on oil installations. We produced, on average, in the first 9 months of the year, about 1.7 million, compared with 2.1 million on average in 2015. And then the oil price fell. We enjoyed like $63 a barrel on average in 2015. We didn't, we had like 53 in 2016 on average. So both from the point of view of the price of the crude and the quantity produced, Nigeria couldn't earn enough forex to maintain
yes, we know about all of those. Yes, but what my question is, what happened that all of these policies, the attempts to shore up the Naira, to strengthen the Naira, did not work?
Well, there are three things you can do.
Okay.
One, the central bank started by trying to restrict demand. Two, the central bank allowed more flexibility in the pricing. But the third step you could take is to boost supply. And we're dealing with a supply shortfall. So the key measure that was required was to look for ways of getting the forex that did not come from oil exports. And that we did not manage to do. So because we are not dealing with excess demand, as it were, we are not dealing with, a wrong valuation of the exchange rate. We are dealing with sudden decline in the quantity available to supply the market. Until you deal with the supply, you will continue to struggle.
All right, tell us, when every time the Naira devalues, people complain and all of that. In true terms, give us a perspective. What is really the disadvantage of the devaluation of a currency to the economy?
Yeah, there are two sides to it. People care about the exchange rate for two parallel reasons. One reason, which is the one that is emphasized by both the central bank and the public, is the trade, the impact on trade. That if you, in the event of devaluation, imports become more expensive. And that shocks the consumer prices. We said in 2016 we've seen that because of the large movements in the value of the Naira, inflation has peaked. We're talking about more than 18%, year-on-year inflation rate. But that's one aspect, the trade, the import effect feeding to, inflation. The second aspect is the is the financial, the portfolio effect that in the event of devaluation, all wealth, all assets denominated in Naira will lose value compared, you know, to other currencies. I think that's a much bigger effect. That's more worrying. If you have shares, the moment the value of the currency falls, the value of those shares would fall. So that's all the money kept in the bank, denominated in Naira, lose value in the event of devaluation. And that's why in periods when you have a devaluation overhang, when people fear that there might be a devaluation, they begin to move their wealth as much as they could out of the Naira to avoid a situation in which they suffer a sudden loss of wealth. Imagine with the liberalization that was done in June, the Naira immediately lost, in the interbank market, immediately lost 40%. And eventually lost about 50%. If you look at the parallel market, it's moved from, if we were looking at like mid-2014, both rates were like 150, but the parallel market rate has moved, you know, above 400 Naira, with, you know, implications for wealth losses for people who had denominated their wealth in the Naira. So there are two sides. There's the trade side to it, and there is the financial side to it. Both sides create problems, you know, for both the overall economy and for individual traders and individual wealth holders.
All right, let's look at when you have Bloomberg coming out with statements like Nigeria is among the worst 4 currencies that performed in the year. And you had 2 African countries, the Zambia and, of course, South Africa, being on the first 10, I think 6 and 7 respectively, Zambia and South Africa. Uche Waleke, tell us exactly what you think those countries got right, you know, that made their currency still hold strong in spite of all the global uncertainties that were out there in 2016.
Okay, I wish I had your conversation with Ayo so that I don't end up repeating whatever he has said.
Okay.
But regarding the performance of the South African rand, for example, of course, you know that South African economy is more diversified than that of Nigeria. As I told you earlier, the major challenge we have in this country is the fact that we are relying solely on a single commodity. Oil, the oil sector contributing less than 10% of GDP, yet oil revenue accounts for over 90% of forex. That is not the case in South Africa. South Africa's economy is a lot more diversified with multiple streams of income. So whenever there is a shock in a, coming from a particular commodity, it doesn't permeate, to the other sectors of the economy. So that is the challenge that we have. And that is also why the medium to long-term solution to the value of the Naira, firming up the value of the Naira, is boosting the supply, is economic diversification. That is just the solution, and that is why you find South Africa rand, performing the way it did in 2016. Earlier on I was talking about those restrictions in 2015. Those restrictions led to the exit of foreign investors who felt their money wasn't safe. And then, of course, we saw that in June 2016, again, the CBN caved in, and after signaling that in its Monetary Policy Committee meeting of May, in June, the CBN introduced the so-called flexible exchange rate system. And that was thought to immediately converge the rates, converge official and parallel market rates. But of course, we have seen that has not happened, to the point that as we speak, some international bodies are still calling for further reforms in the forex market. Still calling for devaluation, where possible, which, as I told you earlier on, I don't support. Venezuela has tried it. Egypt, too, in recent time, tried devaluing the Egyptian pound from £8 to the dollar to £12 to the dollar. And yet, Egyptian currency was rated among the worst performing in the world. Of course, Egypt did that because of its balance of payment challenges, and it was able to get some loans from the IMF. But we are not looking for any loan from the IMF. There is no reason why we should be devaluing the Naira at this point in time. So what is required, as I said earlier on, is to see how we can boost the supply. Now, sometime in 2016, if you also recall, a number of moves were made by the government to boost the supply of forex. I just quickly want to mention 3 of them. The first one has to do with after the president's visit to China, we all read that there was this agreement to, first it was called a currency swap, but we later were told that it wasn't really a currency swap in the true sense of the word, that it was just an arrangement that will enable Nigerian importers,
all right, Uche, let me interrupt you a little bit. We'll go on a break and we come back before you round off with your points. Stay with us on the program. Let's go on a break briefly. Stay with us. All right, if you're just joining us, you're watching TVC Breakfast, and we are discussing the way the Naira struggled in 2016, and we'll be projecting into 2017 how the Naira is going to fare in the economy. And we have in the studio with us in here Ayo Teriba. He's an economist, and we've been talking about this. We also have from our Abuja studio financial analyst Uche Waleke joining us in there. Now, Uche, before we went on break, you were making your point.
Yes, I was talking about the Nigeria-China agreement as part of moves to reduce the pressure on the US dollar. Yes, we were told that after the president's visit to China, there was an agreement with the Industrial and Commercial Bank of China to make it possible for Nigerian importers to settle their transactions with China in the Chinese yuan or the Chinese renminbi, as opposed to paying for them in dollars. Of course, the volume of trade between Nigeria and China has become very huge, growing from about $2 billion in 2005 to $14.5 billion in 2015, according to CBN sources. So given these huge trade relations between Nigeria and China, it was thought that if we had this arrangement where importers from Nigeria could settle transactions in Chinese yuan, it will reduce the pressure on the US dollar. The other issue too, we also had last year from the Minister of Finance, was the case of panda bonds. The federal government, we were told early last year, had plans to issue panda bonds. Panda bonds are bonds that are denominated in Chinese yuan. Again, all this was meant to increase the stock of the yuan in our foreign reserves. Of course, in 2011, when Sanusi was the CBN governor, the yuan, became part of the stock of our country's foreign reserves, although it's still dominated by the US dollar. But the idea was to increase the stock of yuan such that there will be less pressure on the US dollar. The other issue too had to do with increasing the supply of the greenback. I remember when the issue of sale of assets came on, was mentioned, and Nigerians rejected it. Part of what we had that followed that was the Minister for State for Petroleum traveled to India and also said he signed an agreement with them to the effect that India was to give us $15 billion upfront, in exchange for our crude. That would have also increased the stock of course, dollars in our foreign reserves. The point I'm making is that we need to have a follow-up. We need to have an update of all of these moves. Since the panda bond was mentioned, since the case of currency swap or whatever name you call it was also mentioned, we have not had any follow-up or any feedback. All these moves we are meant to increase the stock of our reserves and stock of foreign currencies as well as reduce the pressure on the US dollar.
All
it's
right.
important the government,
Uche
comes up to
Waleke,
tell us
your point
what-
is very well taken there. Let's bring it to Ayo Teriba. You were, you seem to be agreeing with him when he talked about that lack of, or seeming lack of continuity when it comes to some of the attempts to shore up the Naira, and beyond shoring up the Naira, actually strengthen the economy. The arrangement with China there, you know, and all of that, helping to boost supply of the greenback and what have you. How do you sustain these microeconomic policies in such a way that it will rub off on the economy in the long run?
Right, I agree with him that, I agree with Uche that the lasting solution to the problems with the Naira is to boost supply. Restricting demand doesn't solve the problem. It has converted forex scarcity into a recession because the import is needed to sustain the economy at the high level that it was before the shortage. So trying to tell people not to import this, not to import that, or not to do this transaction, you know, on their dollar-denominated accounts simply slows the economy down. So the more you restrict demand, the longer you prolong the recession. Trying to free the price without boosting supply has led to a free fall in the value of the Naira. So the only enduring solution is to boost supply. And
So how do you boost
the
supply
kind
then?
of steps that Uche is listing comes down to either you are trying to export more of the oil, the arrangement with India, for example, or you are trying to borrow money. And those two steps, it's not clear the extent to which it has helped. There is the more enduring approach is to try and boost the inflow of foreign investment. We are emphasizing the trade aspect or the debt aspect, but you could also get investment in at this time.
But how can that happen when you have a Buhari saying that he's standing his ground that he will not devalue the Naira, and devaluing the Naira is one of the attractiveness or attractions for the foreign investor to Nigeria?
You do not need to devalue the Naira to attract investment.
Okay.
The oil price started falling mid-2014. If you had acted strategically to respond to, just recognize that the oil price decline is not temporary, it's likely to be permanent. So what you have been getting from exports is not going to come in the same quantity it had been coming in the past. Don't get transfixed on your current account. The balance of payment as a current account, as a capital account. Look to the capital account and look for ways of boosting inflows on the capital account. The devaluation that you said investors were asking for prior to June 2016 has happened. We've seen 50% devaluation. And the key message at the time was that in the phase of weak supply, allow flexibility. Let the market equate demand with supply. So it wasn't something that you needed to be told. It was something that was obvious. But if we had taken steps that would lead to the inflow of investment, for example, Saudi Arabia is offering less than 5% of its own oil giant, Aramco, in an initial public offer that's likely to be consummated 2018 or this year. It's going to give them, they estimate it will give them like $120 billion US, just less than. And there is plan over the next 10 years to raise the component of that company privatized towards 50%. So they've recognized the fact that oil money is not going to come in the same large quantities coming to them before now. And they are opening up new ways in which foreign exchange will come. Nigeria can do the same. Nigeria has a lot of publicly owned assets, publicly owned companies, state-owned enterprises that earn dollars, that the government, owns them 100%. You can, LNG will own 49%, private investors own 51%. So adopt the LNG framework across all the assets through which you earn dollars and let money come into Nigeria. If it came, perhaps the devaluation would have been avoided. If we took such steps in time, perhaps the recession would have been avoided. 2017, well, we're ending 2017 on a fairly better note than we're ending 2016 on a fairly better note than we started in terms of the price of oil and the quantity of oil produced. If the current situation
remains,
is what we experience for most of 2017, then the problem might have partly solved itself.
Okay.
Yeah.
Let me bring in Uche in here. The government has often talked about patronizing made in Nigeria goods as one way of ensuring that production is boosted, even towards ensuring exports. Now, how will that help in 2016 in reviving the strength of the Naira?
In 2017?
2017, rather.
Yes. Yes, Mike, it will go a long way. It will really, really go a long way. The way to look at it is to look at how much we spend, importing some of these goods. According to the CBN, the highest volume of demand for the dollar usually comes from importers of crude, or importers of refined petroleum products, as much as 30%. So if we can do away with fuel imports in this country, it will go a long way in helping our reserves. The other issue is also some of those items you even find on the list of 41 items. Take furniture, for example. I was looking at the 2017 budget proposal, and I discovered that virtually all the ministries and even the MDAs, all of them have provisions for under recurrent refined maintenance of furniture, under capital refined purchase of furniture. And if you aggregate the amount that is in this capital expenditure for 2017, they run into billions. And you can be sure that much of that furniture will be imported. So if there is a campaign to get all of these things procured here in Nigeria, we will save a lot of forex. The case of Edo State is an example. The governor there has said that all furniture in the all government purchases, especially furniture, must be done locally. That local furniture makers will be patronized. So that will go a long way in saving our scarce forest.
All
the
right,
same thing with rice.
Sorry, Uche Waleke, we'll have to cut in here. We'll take a quick break, and when we return, of course, we're looking at the Naira, the way forward from where it was in 2016. Stay with us.
Right, if you're just joining us now, you're watching TVC Breakfast, and we are discussing how the Naira fared in 2016 and what can be done to revive it in 2017. That's what we're talking about. And we have with us in the studio an economist, Ayo Teriba. We've been talking about this. And we also have from our Abuja studio financial analyst, Uche Waleke, joining us in there. Now, Ayo, let's come to you on the Made in Nigeria goods. The government has continually pleaded with Nigerians, urged Nigerians to patronize made in Nigeria goods. But government has to be in the driver's seat when it comes to working out strategies to ensure that Nigerians actually patronize made in Nigeria goods. What is the government not doing right, or maybe even doing right, that you are seeing as a way of helping the Naira?
Well, you have to be careful
Okay.
about not building castles
In the air.
in the air. You have to ask yourself, why do we import finished goods in the first place? It's easier said than done. It's not about saying, don't import toothpick, don't import furniture. You use imported toothpicks because it's more competitive to have toothpicks produced abroad than produced here. As we speak, we all know, whether people in government or the general public, that Nigeria does not have adequate power supply. We all know that Nigeria does not have adequate gas supply. We all know that Nigeria cannot guarantee a steady and adequate supply of petrol or diesel. And so you have a problem where energy is undersupplied. Then you say made in Nigeria. How will you make in a country with insufficient supply of energy? So if you wanted to see more goods made in Nigeria, solve the problem of inadequate energy supply. We all know that for you to move goods from one part of Nigeria to the other, you need to rely on trucking by road. In other countries in the world where they are productive, where they do make manufactured items, they rely on rail. You move goods by rail, not by. It is uncompetitive, is inefficient, and that's why goods arrive Nigerian shores at a very small fraction of the price at which they can be produced in Nigeria. So if you want to see a diversified economy, if you want to see more goods being made in Nigeria, if we can make it and at competitive costs, why would anybody want to import? So there's nobody that doesn't want to buy made in Nigeria goods, but can Nigeria make it, at the energy costs and the transport costs that they have to face?
So
until you deal with that, it will amount to self-deceit, saying make in Nigeria. You can't make when there's no energy.
All right,
and
so
when there's no rail
the
transportation.
issue then is not really being fixated on strengthening the Naira. It's ensuring that the basics, the fundamentals are in place, and then the Naira will naturally...
As a matter of fact, because
Yes.
most of this energy that is failing, and even rail transport, are run by state-owned enterprises. The link between infrastructure and investment that we have said is that if government could privatize those infrastructure, government could allow foreign investors to come into those infrastructure, as we did in telecoms, you will solve the two problems with the same solution. So investment will come that will show up the reserves and strengthen the Naira, and then also remove the infrastructure bottleneck.
Okay.
And then the economy will diversify.
Okay, let's bring in Foladele in here to give us a perspective on social media, how Nigerians are reacting to this. Fola, good morning.
Happy New Year.
And Happy New Year.
Happy New Year.
Yeah.
Good morning, Ayo. Happy New Year.
Happy New
Good
Year.
to see you all. And we hope it's a good year for Nigeria and for
Of
the
course
Nigerian
it is.
Naira.
Of course it is.
So let's see what some people are saying about how Nigeria did in how the Naira did rather in 2016. Ibrahim Ola Balogun says, eroding value of Nigerian Naira ranked among 4 worst global currencies in 2016. Mustafa Sahid says, the year 2016 brought back Sambisa Forest and some Chibok girls, but it went away with the value of Naira. E-Update NG says, the year 2016 is Nigeria's worst economic year. Nigeria became one of Africa's weakest currency. Naira, rather. Theo Dialect says, the Rand has gained more than 16% against the dollar since the start of 2016, and Nigeria's Naira has lost more than 1/3 of its value since June. Namang says, in 2016, Leicester won the EPL, Brexit happened, Nigeria in recession, $1 to 500 Naira. Now a TV reality star is the President of the United States, and time is near.
Wow.
Lloyd Atiku says, 2016, the year the Naira and foundation of Nigeria's monetary policy were totally destroyed. The house will come down in 2017. Before I go, I want to know, of course, we can't predict or hope that we would have a better year for the Naira without measures being put in place for that. So what do you think needs to be done? What do you think the government needs to do? What measures need to be put in place? What policies do we need to adopt or drop for the Naira to be stronger this year?
Well, before policies, we had the whole of 2016 to put policies in place. And we didn't quite do. So we felt the full force of the fall in the oil price and the fall in quantity. Fortunately, we ended 2016 with a better oil price and a better outlook for the oil price in 2017. We also ended 2016 with a higher level of oil production, with also better hope that that will stay. So the low price and low production of 2016 is no longer with us. Let's hope, that they don't get to come back. So you are likely to experience 2015-like conditions in 2017. So you may expect that the recession is not going to last much into 2017.
Okay.
Nonetheless,
Hopeful.
we should still take measures. I have said we should open up infrastructure, rail, power transmission, gas pipelines, so that investment can come into them the way investment came into telecoms. So we solve the two problems that we have, which is infrastructure decay and shortage of foreign exchange. Investment gives lasting solutions. You don't pay investors back. If you are talking about debt, you have to pay it back one day. And trade, there's a limit to which you could expect to boost trade, in the current global situation. So I think that the gloom of 2016 might have gone with 2016, given the improvement.
All right.
Okay, that's hopeful.
That's very hopeful.
Really hopeful.
Fingers crossed.
Yeah,
like
fingers
Ngozi.
crossed.
Very
I guess you're
hopeful.
happier now.
Yeah, let's
Okay,
hope so.
that's
Let's hope
fine.
people at home are happy as well.
Exactly.
Thank you.
Thank you,
And do
Fola.
take care of your cold.
Yeah,
Yes.
I'll try. Thank you. Let's get to Abuja. Uche is standing by in there. Now, Uche, let's, in practical terms, let's look into 2017 for the Naira. As at this time now, Naira is about 500 to $1. Is it possible within 2017 to bring or to increase the value of the Naira in practical terms from what you are seeing the government do?
Yes, let me start by saying that, yes, I agree infrastructure is the backbone that will really drive this economy. But my fear here is that if we are talking about short term, if we are talking about 2017,
We're not doing
given the huge infrastructure gap
we'll do
in
it.
this country, we may not, because it's something that takes time. If you're talking about rail, if you're talking about rail infrastructure, for example, it takes time to do a rail. If you noticed, the Calabar-Lagos rail line, the rail line, for example, was also mentioned in the 2016 budget, but as we speak, it has not even taken off. So what I would suggest is, yes, we realize infrastructure is key, and that's also why I'm happy with this idea of economic zones in the geopolitical regions, but ensuring that there is basic infrastructure there to really drive this import substitution. But what I would suggest in the interim is for us to even start from somewhere. Let's have this law akin to the Buy American Act that was enacted in the 1930s in the US as part of measures to get out of the depression at the time in the US, that will require government purchases, all government purchases to be done locally, except where they are not available, or except where maybe you find them more local ones are more expensive by maybe a given percentage, maybe say by 25%. But if you also realize that because of the high exchange rate, if you're also doing an import, or you want to, governments do a lot of printing jobs, for example. Instead of taking these printing jobs to Malaysia, to London, to have them done, you can give some of the contracts to local printers here in Nigeria, because if you also take into cognizance the exchange rate, you will discover that the cost of printing out there is quite high, especially given the fact that some of our local printers here too, do quite as well. So for the exchange rate to come down, it is the supply-demand side. On the demand side, we have to use import substitution. You know, if we fix, for example, our educational institutions, our health
unfortunately, we
centers,
don't have enough
people.
time. Sorry, Uche Waleke, we'll have to leave it there with you. Thank you so much for joining us on the show. Ayo Teriba, I want you to have the last say. And this question that keeps burning in my head, can an economy continue to thrive, or can any economy in the world actually thrive without the basic coins?
Coins?
Yes. The 10 kobo, 5 kobo, 50 kobo, 10, you know.
Right.
Yes.
Most currencies in the world are actually more coins than notes. But the problem you have is that all of the notes that we have in Nigeria today are so small in value, they should be coins. They should be coins. How much is 1,000 naira? If you look at the official rate, that's $3. 8,000 naira is $3. If you look at the private market, it's $2. In Europe, that would be a coin. Okay. In Japan, that would be a very small denomination coin. So the minimum note in England is £5. Okay, so anything below £5, coins. But that's a debate we've had in Nigeria, you know, for long. Before we did the advocacy that led to the introduction of 100 naira to 1,000 naira in the Abacha Abdusalami regime before General Obasanjo came in 1999 and did them, you know. But even those currencies have been eroded in value. So we need to introduce larger denomination notes and let coins, you know, occupy the.
Okay. Ayo Teriba, thank you very much for coming on the program this morning. Thank you.
So
and we also thank Uche Waleke for joining us from Abuja studio. Thank you very much, gentlemen, for coming on our New Year's edition of the program today, the first of its kind in 2017. This is where we come to the end of today's edition of the program, the first in 2017. It's really history-making, I must say.
Yes, let's hold President Buhari to his word. He says change will manifest and be sustained in different sectors of the economy, especially in agric in 2017.
And he has also called on Nigerians to assist where possible in supporting the government towards achieving its goal. We look forward to a brighter 2017 as we get along. I am Mike Okwache.
And I am Ngozi Alebu. Stay with us always, Monday through Friday.